Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, January the 16th, 2022. Being that the US markets are closed tomorrow in observance of the Martin Luther King holiday, I thought today might be a good day to step back, take a look at the big picture, and try to do the update, bringing us all the way up to where we are right now and what our potential is for either direction. So starting here on the monthly chart, my monthly maximum chart that I can get for the future, the NASDAQ future, we can see that the NASDAQ reached a cycle degree high at 4,884 back in 2000. And by 2002, the market had dropped 83%, lost 83% of its value in roughly 2 years, reaching a low at 809.50. And it's off of that low that we started on a cycle wave 5 advance. Now, within that cycle wave 5, there are going to be 5 waves of primary degree. And here we have primary 1, primary 2, primary 3, and primary 4. The low of primary 4 is here at the March 2020 low, which was our reaction to that first round of the coronavirus pandemic. And then from that low of March of 2020, we have been in the process of tracing out a primary 5th wave. Now, within that primary 5th wave, there are going to be 5 waves of intermediate degree. So let's bring this down to the weekly and see how that all counts out. On the weekly chart, we have, no, I'm going to move it again. Every time you move the chart, it kind of changes the positioning of that. And I want to bring it in as close as I can to where it should be. So we have the 5 waves of intermediate degree advancing. There's intermediate 1, intermediate 2, intermediate 3. So thus far, I'm still okay with this count, with this labeling. Now, the rest is up to the market. And let me explain a little bit more of what I'm talking about. In an intermediate 4th wave, we'd be looking for the market to drop back to the 4th wave of 1 lesser degree, which is this minor 4. That low is at 14,410 roughly. And from there, I would expect then that's where I could place over here an intermediate 4. Label it as an intermediate 4. We start to move higher quickly, without pause, just a serious rally to new highs to complete intermediate wave 5, cycle wave 5, excuse me, intermediate wave 5, primary wave 5, and cycle wave 5. What label gets put on top of that on a super cycle degree, I'd have to go back and start really trying to get additional information to see if the NASDAQ is actually going to mirror the S&P in that it's a super cycle wave 3 that's completing in the S&P, or may have already completed. And that kind of produces or will produce a much larger corrective phase. Now, right now, we're just looking for an intermediate degree correction. And I'm suspecting that that will bring us back to 14,410, 411. Now, I'm going to bring this back down to the 4-hour chart. And now we can take a look. I've kind of changed the labeling around a little bit on this internal. Instead of this being an A and this being a B and this being C and this being an X, and this being an A, and putting in too much labeling going on. So instead of looking like that this would have been the C wave, I've now kind of put the A and the B, took away the middle, the A and the B, and this is minute wave 1 of minor wave C. That allows for a lot more decline. And then as it has, the market ended up putting in a pretty clean ABC up. So let's move this. Let me move that one over to where it belongs. Put that over there. Put this B over. Again, this is just when you're looking at these longer term charts, things get moved around a little bit. Put that there. And then it had 3 waves up. And so as we were counting when it was coming off, that we could not leave this intermediate 4 here. That all had to change. So that's going to come off. It's the old label. And this will be the minute wave 1 of minor wave C, minor wave 2, and now we're into wave 3, of which I feel this is wave 1 of 3, wave 2 of 3. Now we've kind of knocked on this door of a 3 of 3 move several times now. And first to the upside, we were looking for a 3 of 3 move. And then to the downside, now we're still looking for it, but in the context of a 3 of 3 move in a C wave. So if this is 1 of 3, this is 2 of 3, the market needs to drop. The market needs to just go without pause. So it's got to pick up steam. Now, the Asian markets begin to open in a minute. I think they start to open about 5 o'clock Pacific time. And that they're open with European markets also being open. So the US is the only exchanges that will be closed in observance of our own federal holiday. So, but a lot can happen by the time that we get back to trading on Tuesday morning, or as many traders maybe start to move in tomorrow afternoon as the Globex session kicks in again. So right now, Globex will be open and will close, I think, at approximately 8 a.m., 11 a.m. Eastern, 8 a.m. Pacific. Either that or it's going to be 8:30 Pacific, 11:30 Eastern time, that the Globex sessions close and then reopen again at 6 o'clock Eastern, 3 o'clock Pacific on Monday afternoon. So, but if this is indeed wave 1 of C, wave 1 of 3 of C, wave 2 of 3 of C, because you can see, look at that nice ABC. Let me just kind of open that up a little. I really don't get why they do this. What's going on with the computer? Come on. No. All right, let's try it again. At least I got it today. It's not going to do it. So I'm going to go through the 30-minute chart. Anyway, you can see A, B, C, B, and then we've got a C wave. The only thing I can count on is that possibly this is a 1, a 2, this is a 3, this is a little 4. If it drops back below 15,540, it's an ABC up, and we should look for the downside. Now, being that the market's going to sit around, being that the Asian markets might start to buy it, the European markets might buy it, we have to leave open the possibility that the market's first going to come up here to 15,678, then start to decline again. But at this stage, with this particular labeling and the way the market has reacted to itself, to what's happening in our country, what's happening with our interest rates, what the Fed is basically saying, what the earnings initial reports from the banks laid out last week. Not a pretty picture. If the banks are making money, then you got to start to look at other things, because they've always been the steadfast in a low interest rate environment, they were always going to make money. Now suddenly they're not making money, but the interest rates haven't really started to be hiked yet. So something else was going on with the banks that caused them to lose money. I don't know if it was bad trading. I don't know if they had divisions that kind of lost. I don't know. I did not read those earnings reports. I just know that they were not well received by the market. So we have the earnings season continues into next week, but I believe that it's going to be the week after, let me just double check. Let me see when Apple, yeah, Apple reports on the 27th. Amazon reports on the 1st of February. And we have Facebook on the 2nd of February. We have Google on the 1st. So, you know, we have the end of January into the first week of February for the larger companies to come out and start to report. Microsoft reports on the 25th. Again, that's that last week. Netflix on the 20th, which is next week. That's Wednesday. PayPal on February 1st. Tesla on the 26th. So again, mixed bag, but we should start to get an indication from how things are going to really pan out here. And then we'll start to be able to gauge what the market is going to do. But here we are coming back down again. Now we're at 545. Again, 5 more points, and it's breaking below what I would consider wave 1 of this C wave up to finish the second wave. I know I'm getting complicated with my numbers, but I would not want to see it. If it drops below 15,540 within $5, then I'm looking for it to start to accelerate. Again, it's going to start to break our moving averages. Back to that hourly chart. Now, when these things start to happen, that's when the fireworks began. We broke below the 50, tried to get up above it, could not, sank, and it really did go off pretty quickly. They opened it higher. They got it up to 653 right at the opening today of Globex. Somebody had to have it. Look where it is now. It's already down over 100 from where it opened 2 hours ago. So if that continues, then the market's going to break the 8. It's going to just start drifting down. Our first layer of support, first we have some right around 15,400. That's just price support. Doesn't mean that it's going to hold, but it will provide a pause. Then we have support at 15,311, which is where the market came on during Globex on Friday. Then we have 15,152, which is the previous low for the first wave down of the C wave. Now, as this continues, we don't really have a whole lot. You see, nothing really over there. So we get this black hole. There's really not a whole lot of support. But what I can now put in is, first let me go back and see if I can't. See if that'll pull it back up for me. Yep. I want to put in some Fibonacci's for the third wave. Go there to there, up to the top of what I'm labeling as wave 2. Now, what does that tell us? For a third wave, when it's compared to the first wave, 100% bare button minimum. So here we are again at 14,501 to 14,410. We still got that 90 to probably a 100-point range for a completion point. Again, 0.382 for that intermediate fourth wave fits. But this is telling us a little bit different. This is telling us that it probably can go a whole lot more. Then what am I looking for? 13,569. And that pulls us down to that 50% level. Still okay in terms of an intermediate degree drop. Let's go back out to that daily and take a look. Here we have the third, and now we're coming back down. Actually, I have to go back out to the weekly, to be honest with you. Again, we're looking at all the pictures here so that we can get a grip on what's going on. So the 50% mark is at 13,682. That's where the the intermediate wave 4 would be equal to 50% of wave 3. That's acceptable. Even under Elliott, that's acceptable. It overshoots that 4, but the internal count starts to really tell us that that possibility is now in existence. Wave 1 was big. This is not all of wave 3. So again, I have a couple of choices. How do I want to count that? Do I want to count it as an ABC and this is an X and this is the A and this is the B, and now we're going to come down in the C wave, which would be the second ABC? That is still a possibility. But if the markets begin to drop with the energy that they began to drop last week, it should be intensified in this next sequence down. So we should see it really start to come off much quicker. And the buyers aren't going to be stepping back in. So again, because we're sitting into earnings season, a lot's going to rest on what is actually reported. And again, remember, they're only reporting final year, what the fourth quarter did for them and what their final year report suggests or does. And I think what's going to become more important right now, since we're moving forward, is what that forward guidance will suggest or indicate. That's going to be the meal ticket for the bulls or the bears. If they're coming out rosy pictures for 2022 and their forward guidance, I would highly suspect all the stops and we rally. And hopefully we get down to at least a level where we be able to say, yep, that's the bottom, we got a wave 4 and we're off. Now, so under the current labeling, I'm looking for a bigger third wave, but it could be a 3, a 4, and a 5, getting the third wave down to here, 44.10. That I would accept. And then a small fourth wave, and then a fifth wave, maybe down to here. As long as that third wave is not the shortest wave, the total third wave is not the shortest wave, we'll live, we'll be okay. Because then we're following the rules of Elliott. Wave 3 cannot be the shortest wave, whether it's in this sequence or whether I'm comparing it in the larger sequence. So the larger wave 3 of C or the wave 1 of C, wave 2 of C, wave 3 of C cannot be the shortest wave. So if it all works and the count fits, then I get to leave it as this. But I'll work all that up. But now we just are going to really go over what our potential is, what our strategy might be. Again, I'm keeping a very, very open mindset. And so my mindset is when I come in to trade on Tuesday, is I'm focusing on what's happening in front of me. I'm focusing on the price action plus whatever my Elliott count and my Fibonacci and the moving averages are telling me for that particular day on that particular chart. I'm using a 1 minute, a 2 minute, a 5 minute. What are those moving averages doing on those charts? That's going to dictate whether I buy and sell in and what direction and for how long. But if we're dealing on an hourly chart, I'm looking for a third wave down, but it's a 3 of C. C waves are often very crushing in and of themselves. So having a C wave come down to 14,000 or below, totally within the realm of reality for the move that's at hand, totally within the realm of reality. Because the C wave would be all the way from 16,659. Now, that first wave could also be the extended wave. So this could just form a nice clean 3 waves, or excuse me, a nice clean 5 waves for a third wave of C, then 3 for 4, and then another small 5 waves, and then it's done. And we get to label it. So this could be the extended wave, and this does not mean that this has to be. It can come in here, which puts it as long as that. Then we're fine. So here I'm still expecting 3 to get down into here, and then we get a 4 and then a 5. So that's what I think for the NASDAQ. Now, what else could be going on? Let me go back out to that weekly real quickly here. I want to be going on too long. If indeed this has to change, and I have to move this intermediate third wave back down, put the third back down, put the 4 back down here, and count this out as the intermediate fifth wave, well, then we're in the beginning stages of a much larger correction. And I would be looking for it to come down much further, much further. So even though this would still be an intermediate 4. So that would be the first level of support for this initial drive lower. But we're looking for much, much lower levels before the first leg down on a much larger correction would be. I'm right now not looking to do that. But what would begin to change that, and the market in terms of on an intermediate degree would have to break 12,465 before that would likely be the case. But we're going to get a lot of hints. If it starts breaking below 50% of 13,682, it ceases to really be a wave 4. It is getting a little bit too big, and we're starting to threaten levels that a fourth wave should not get to. So these are just potential. This is what's out there. Again, markets are very overbought and overvalued and have been. If that continues in terms of the adjustment to the overvaluation, if that continues because of earnings, I'm still expecting that to come through as an intermediate fourth wave. I'm actually not really looking for that to come much bigger. Now, here's where the other kick comes in. The NASDAQ and the S&P have basically kind of gone neck and neck, equaled each other in terms of what the labeling and the counts were. But the S&P now has broken below a level, which has shifted me to believe that the 5 waves up that we got to that 4808 level, the all-time high right now, to an intermediate 5th wave and not a minor wave 1. So I've had to fill in the minors where the minute wave 5 wave advance that we got up there was a minor wave 5 wave advance to complete intermediate wave 5. And then that's the case, then it's going to be primary wave 5 on top of that and cycle wave 5 on top of that. And so the S&P would be involved in a much larger initial decline. Now, that could go hand in hand with an intermediate 4th wave that's going to reach down towards 14,000. That fits. You know, another 1,000 points from here, that all, and not that it'll be very tradable, but now we're looking at how the market's going to move, because can the NASDAQ then move in an intermediate 5th wave to new highs while the S&P doesn't? Well, I look back at that and I'm thinking to myself, well, you know what? The S&P moved to a new all-time high, whereas the NASDAQ didn't even get close. What was the high in the NASDAQ? With its high being at 16,768. So, excuse me, I went to the back. I go up to the 4-hour chart. All the way back up to here, 16,768. That one thing, it only got up to 16,639, then it started to drop. And it couldn't even really get itself up close to that level to show me that, okay, this was the end of 4, now it's going to go. Didn't work. So, wrapping it all up here. I think that if you're going to trade Globex tonight, if you're planning on trading tomorrow morning during the Globex session, I would expect the following. We have the potential for the market to hold itself up above. Right now, it's not looking real pretty. We're getting down there. Again, we're dropping as the Asian markets open. If we break that 4, that 8, which is at 15,540, which is pretty, well, it just did. So I'm looking for now the acceleration to continue. Probably when Europe opens, it's going to start to drive it down. Eventually, it should break below 15,311, 312, and start heading down. We have 618 support at 15,078. then 14,947, 14,825. Then we're down into the levels where the zone to complete this leg should come in 14,502 to 14,411. And I'm going to run it all the way down. It can drop further, but I'm just looking for this third, the third to complete, get a fourth wave in, and then do a fifth wave down. And this third needs to at least get to 14,502 down to this. So if this minute 3, so minute wave 2 of minor wave C. So this is 1 of 3 of C, 2 of 3 of C, 3 of 3 of C, etc., etc. So we get that third wave to finish down here. So the minute third finish down here, put a little 4 in, come back down for 5, put the 4 on there and complete it. That might coincide with the S&P completing its first 5 waves down to start its larger correction. So again, if you're going to trade, we're now going to bounce around this for a while. We came down, we got on to 37. The break has occurred. Even though they're taking it back, it can't overlap. It just did. And that leaves us in a precarious position of the market will eventually come back down. It came down and found the 30-minute 20, found some support. They're going to bounce off of that. It's all very technical. Now I'm going to look for it to just continue to break it again and start heading lower. That's where I'm going to leave it for right now. So kind of updated the larger picture. We're still counting this as an intermediate fourth wave correction. We still have those break points below 15,000, which might contain it, and then again turn the market higher. We're going into the bulk of earnings starting next week, and then into the last week and into the first week of February. So a lot to come, but then we're not looking for all this whole story to finish until we've got the bulk of these earnings reports are out, particularly from the big titans. That's Apple, AMD, AMAC, Amazon, Google, Facebook, Microsoft, Netflix, NVIDIA, PayPal, and Tesla. And there's likely others. We got Adobe, we have MicroStrategy. There's so many stocks that are just so expensive that there's a lot of adjustment that needs to happen. So trade well, trade using the moving averages, trade using the Elliott and using the Fibonacci levels. And our next update will be, let me put it this way, depending on how the market opens and trades tomorrow morning, and then I may come back as Globex opens in the afternoon for me on Monday and make an update just to cover. If it follows exactly what we're talking about now, then I'm probably on that next update would be on Tuesday. But right now I'm kind of looking that I'll probably come back and do a quick update Monday. Great trading tomorrow if you're choosing to trade. If not, have a great holiday, enjoy the day off, and we'll be back trading on Tuesday morning.